for many of you, you're familiar with GEX ratio, and GEX ratio in this is shown as the second line. So here I've got his screenshot for Netflix, and the state that you have here is according to our market model. We talked about this a little bit earlier today. There's really 4 states in the market model. Green is where both planes are dominated by calls. Red is where they're both planes, left and right plane, are dominated by puts. And then there's obviously a mixture, whether you're dominated by in the money, calls and puts on each side, or out of the calls. And that gives rise to the yellows and the oranges here. There's a third line per stock that you can see that Dan has added here. And it is a oscillator. And what that means when something's an oscillator is it goes between two different levels. And it goes between -1 and 1. Now, this one is not discrete, which means it's locked into, -1 or plus. It does take on values in between. And if we look here, say at Netflix, you can see there's a 0.98, then it triggered and it went south. Here we've got a number. We've got ones, which means it's, fully bullish in delta state. This is a delta, what we call the delta oscillator. It dips a little bit, perhaps a buying opportunity, and you can see GEX ratio actually came down too, and then it popped back up, and away we go. And you can see now it's whipsawed a little bit, but it definitely got weaker last week, and you can see how things start transitioning out of range. Why I bring this up in the context of your question about a ranking, I would urge you to take a look at what we're seeing. And when you see solid -1s, or you see solid +1, you have a sense ranking. You can take a look just down the ones that I've got up here on the screen: Netflix and Nvidia, PepsiCo, T-Mobile US, Tesla, etc. And you can get a real sense of things that are turning, rotating in their own way. Now, remember, these are all components of the Qs or the S&P 500 or both. And, as they go as a group, the index. But as we talked about earlier today when I was live, the SPX tick is pretty weak and has been, whereas the Q tick is actually confirmed and has rolled over to a positive or a bullish type of phase. And so it's telling you the Qs are relatively strong. Components of the SPX are somewhat weaker. And so that somewhat aligns with some of what we're seeing here. But you can get a sense, I think, especially in these spark graphs, you get a sense of what is happening with the individual components. And so I would offer to you, Sanchin, and others who are listening, take a look now at the addition that we've put into this summary table. Because what I think it's going to do for you is it's going to help you isolate to a large extent what you're seeing, how to evaluate things. Here's another one that he put up. Dan updated this tonight. And clearly, you see where some bullishness is coming in, but you also see where bearishness is coming in, but you also see where the bullishness is too. And you see when you stack these things, I don't know if you guys have seen this, but when you stack these things and you just look at them from a distance, I think it should be pretty clear that in the big picture here, you should be able to see, where the reds and the greens are, and the market's definitely going through cycles. So, hopefully you're able to use this information that you see here to help you form an opinion about ranking and frankly what's happening.
Yeah, this information is useful. I see every morning. At least it tells us at least if you have a position, right? If it goes below 0, you can exit.
Right.
Yeah, this is helping me a little bit. Thanks for that.
Right. Yeah, I mean, we're still working on the implications of this. So we're developing. I mean, obviously it works, right? The tool works. The calculations we've had the calculations now since May. So this isn't like we just created this last week. We've been working on this behind the scenes for some time here. Why this is powerful is that, here, let me call this back. Why this is powerful, sometimes these things pull back. And they don't go just between -1 and +1, but you get a kind of a little bit of a weakness that comes in, maybe a reset where it goes below 0. Then you can see the delta state coming up long before, everything just moves. So when you start seeing the delta state, and I'll say this much, although this is proprietary, I'll say the delta state is calculated exactly on what you were talking about. You are looking at the overall total delta in the right-hand plane and the left-hand plane for the near-term expiry. That's exactly what you're seeing here. Now, this is an oscillator, so it's been pinned mathematically between the two numbers. Your takeaway for this that I think is important, and it's important for everyone listening here, is that if you're looking to see whether you should get into a stock or not, it goes right to what you're saying, Sanchin, that the delta state in your observation, that the delta state, helps you decide whether to go long or short on a position. We too can confirm that. And it's pretty clear when you start looking at this data about how just prevalent that is. So it's something to pay attention to. I would urge everyone to give us some feedback as you start using this tool, what it means in context, the kind of the forward look ahead, because this is a crystal ball view, right? This is the options market pricing in a forehead view of the next expiry and how they're placing their delta bet. Play it accordingly.
Yeah, thanks.
Sure. Yep. And when you see a -1, it's max bearish, means that there's a huge imbalance. So if you think about GEX ratio literally is the gamma exposure of calls ratioed to the gamma exposure of puts. And that's why if it's below 1, right, you have more puts, more short-term bearishness in a GEX ratio than you have in the calls. And GEX ratio, which is the line above this, is absolutely a valid number. But as we've seen, GEX ratio can stay elevated or suppressed for long periods of time. So gamma is different. Gamma is different than delta. Delta is a literal exact with risk, right? It's the risk I'm putting on that trade. And when we start seeing delta really starting to dominate the equation, it turns green. And you can see how, sometimes we start seeing the numbers converge up, and then we see the state of the complex move into that green, where we have in the money calls on the left-hand plane, and we have out of the money calls on the right-hand plane, and that's what's represented here by green. But it actually starts often leading before that. The flip of that is sometimes we see, the actual, degradation of the signal where you have been green, and then all of a sudden you start weakening, and you go from, a scenario where you have a lot of calls in the complex, and you're maxed out, and all of a sudden the market decides to take a change here, and you can see GEX ratio coming down. This is XOP. You can see GEX ratio coming down, and you can see some indeterminate values, and then we tried it again, we oscillate back around. Not a perfect indicator. I want to be clear with everyone. It's not a perfect indicator, but it's pretty darn good. So if you see stocks and ETFs of the class that you're looking for and it fits your thesis, it can help inform how you should be looking forward.
Who decided to add ARKK? Who did that?
Dan did, actually. You're going to have to take that up with Dan. He added that at the last minute for whatever reason, but and clearly this actually is confirmed if we go look at the Qs, for instance. While we're here, we might as well. Here's if ARKK is represented by technology stocks, of course it is, Kathy Soul. Then what we're effectively dealing with is let's take a look at tick Q against the Q's price, and you can see we had this change, right? So we already have made the transition in the tick model. I know we don't track this, but I look at these things just to see who's the strongest, and TOS has got its own version of the Qs and the SPY and all that stuff. But you can see lower left towards the upper right, red over cyan. We were above this. We're challenging that model right now, just like what the ARCX is doing. Right? Today's ARCX is right here, so we're challenging the top of the model. But the thing to be aware of here is that the thing that Dan was showing us right here, we've got a lot of green here, right? So if technology is represented by ARK, although we've had a couple pullbacks, here's a 9832, so that was back on 1130. We'll go back to 1130. Yep, sure enough, we had a little bit of a pullback. We had probably some profit taking coming off the CT here, and then it's been fairly strong, and now we're playing back with 1111 through today's data, still showing that even though with this pullback, the Qs are still showing a positive view into the overall delta structure. So I don't give Dan too much crap because I think his use of ARKK in this case is actually pretty nice. And he's got it. The other ones are, if you guys are not like checking out the market structure map, the work he's doing is brilliant, absolutely brilliant. And to the extent you can leverage this, I would urge everybody to do so and get some feedback here. How do we automate take some of the burden off of him, and how do you best use? But definitely take a look. look at. Yeah, let me grab. We're in order. Yep, there we go. Oh, you mean 12.6 here? Yeah. No, what it's basically saying is that we're heavily dominated. And not that it's never been that high. It's not like it doesn't set a new one every single time it's a one. It's basically saying compared to the number of puts that are in the complex, it's completely dominated. You know, the ratio of delta calls and delta puts, there's delta calls out of the money calls, some to a huge amount, in the money in this case, some to a absolutely huge level compared to the puts that are there. So we're not seeing the evidence like you see back here, where you're actually seeing weakness start creeping in, right? You see the negative 0.55 here, or negative 0.56, or even this weakness here that you see at 0.15 or 0.0. Now I know we're coming out of a bearish phase here, but you get the idea that what we would expect to see if the market is truly going to come apart here, we would start to see weakness like we see right here where it says 0.35, 0.35. Now we're getting closer to parity. What that means is that the ratio of calls and puts in their delta in the left-hand plane and the right-hand plane are now becoming more balanced, right? So that means calls closed, puts open, could be a combination of both, but it's basically telling us in the delta balance of what's happening, we're getting closer and closer to where it's, you know, this could be just a pullback in price and delta, meaning we could resume back and go north. See where it says right here, back on 11.9, where it was green, light green, pulled back to 0.32, and then we were green, through all of November, right? Kind of that same thing. We could see that and then see more green from now until Christmas, the Santa Claus rally and all that stuff. But can also just drop down one from here, and this catches my eye right now. We definitely see some weakness in the SPY. Qs definitely see with today's action some clear calls closed, puts open type of action. So if nothing else, if calls were closed, it would expose puts, and there we go. And now that's where GEX ratio, I think, start informing what we're starting to see here, right? Because short dated, we definitely are seeing a drop from yesterday in the SPX, almost to a really high number, 1.32, down to 1.19 in the GEX ratio, right? That is telling us calls closed, puts open. Puts are getting bigger for whatever reason. And same thing in the SPY, going from 125, 1.25 to 105, and you can see the continuation, right? We were up at 1.43, 123, 125, 105. We get below in the GEX ratio, below 1 to 1, market's going to start favoring the put side of it. And guess what, folks? That is exactly right here. We look at this, look where we are. We're on the bottom side of the transition. We've got negative gamma. That's going to start dominating the conversation. This net GEX is going to start flipping negative. We're going to see put dominated for the entire structure in the summation. Net gamma dollars is going to flip negative, and we're going to see basically the deltas up here start eroding the more we go down here. Why? Because all of the put deltas are going to start limiting to 1, and that's going to flip all these deltas here if we continue south. This is why I said earlier today, I don't know if you guys caught it, Michael Plastic asked a really good question. You know, should we go short? And there's nothing here that says go short. Now I can change tomorrow, but Taylor, to your question, we're getting on the boundary where the risk reward is really well defined, right? If this thing stays above 0 and we start seeing the CT move up, then I would say this is an entry point. If we start seeing the breakdown in the CT like we saw today and it continues south and frankly heads lower, let's just go to the ARCX here, and heads lower, like continuing south. So think of it as being this line, right? This line being this line, and it just continues to cut into the ribbon. That's a problem. And I think what we're going to see in the tools is I think we're going to see this flip like we already see the SPY flip. SPY looks like it wanted to go 3 days ago, right? Today's Wednesday, Tuesday, Monday. Monday was the give up the day goes, or give up the ghost day for the SPY. The SPY already led things lower. NDX already starting to show it's not pinned. The state is not pinned, but it's clearly bearish in the NDX. The Qs, today they said, we're out. Call's gone, puts dominating. So I think that's something to pay attention to. But look what IWM did. Look what IWM did. Was yesterday a pull back and a buy day for today? Maybe not in price, but maybe in terms of deltas. That's kind of how I look at them. I don't know if that's useful for folks. And I would expect, by the way, keep an eye on the VIX. Dan and I were talking about a couple weeks ago. The VIX as a contrary indicator, or what is called an orthogonal indicator. So you can see as things go green, the VIX goes red. red. Wow, this is kind of cool, right? So just keep in mind VIX calls go green when everything else turning red, vice versa. Kind of get a sense of, by watching the VIX deltas, what people are doing. And VIX is very liquid, right? There's a lot of people playing VIX for volatility out there because they use it as that orthogonal component so that when prices go up in the underlying instrument, the VIX typically drops in volatility, and we see that manifested through puts. And I think that's kind of what you're seeing here. Now, the question is, what's going to happen? Is this thing going to continue to go down? It's not railing out at -1. It might. Let's keep an eye on it. See what happens here as it goes through a little gyration. So again, I hope that's useful. Taylor, does that answer your question? Market climbs a wall of worry, right? So, I mean, in hindsight, and I get it, this is a hindsight analysis, an armchair quarterback analysis, but clearly this 3-2 and then the continued state upward really portended well for the SPX, right? So one of the things that I'm doing, I waste every time on it, but I'm taking can you see a spreadsheet or not? All right, so I'm taking effectively these trades and I'm looking at what is the delta state and all of this for a number of stocks here that I've got rolling here that I'm keeping track of. And what the intent here is, and what it's basically shown, is that when you start getting, somewhat weak, these are either re-entry points or exit points if you've got good profit. Take some profits off the table, and then you can get back in if you ping back out here on a high level. And there's no reason, I know what you just said, and I absolutely agree with you. I'm 100%. If you're already overextended, the worry we have as a trader is that we're already overextended. But how many times in hindsight have we been able to look back at a stock, at an RSI or whatever we're using as our overbought, oversold indicator, and say, damn, I should have been in that, because what can be overbought or oversold can remain bought or oversold. And I think for the liquid instruments that I believe are under options control or options influence, I think we can see it directly in the delta position. So that's what I'm trying to prove. And that's why this is still a tool under work. I don't think it's going to work on a stock that's got OI of, 1,000 contracts total, right? And certainly only trades monthlies. No, I'm not interested. I'm interested in looking at where do we have trillions of dollars of market capitalization and notional value, and where are we transacting billions per day? It's in the SPX and the SPY and the NDX, et cetera. Let's focus our attention there. That's right. And so volatility is going to be cheap or is low right now, right? So effectively IV is lower. And so if you were to go long on a few of these things on the put side, you can probably pick up protection pretty cheaply without not having to sell. Again, not a recommendation, but yes, you and I are 100% synced on what you just said. That's exactly how I think, can we see some of these things lead? And I think the answer, it's still out there. We still got a lot of work here to do, but this is, with this whole left hand plane, right hand plane stuff and just all of that, and then getting it quantified and being able to do all this, I think there's a pony here, and I think this is pretty serious stuff. So, we'll see, and we'll let everyone know, and we want everybody to give us feedback, right? The tools are there. Whether you use them or not is entirely up to you. But if you don't know how to use them, ask, because obviously we're pretty excited about this. Yeah, and that's why I asked Dan if he could add this delta balance row to his charts, because now we have GEX ratio. And one of the criticisms that I have over the GEX ratio is that it's a GEX ratio, and as we saw with IWM, it can be pounded into the ground for a long period of time. It was over 60 trading days, right, that this thing was down, between 0.3 and 0.6. Well, the ideal entry point is around 0.6. Which one? When you have 60 of them to choose from, right? So if you did it, the first time you were down at 0.6 and it made a burp to go up to 0.7, you were bag holding for a long time, right? And if you're holding options, they probably expired, against you, because a ratio is a ratio. It's not actually that, those options are going to sit pat. So does delta inform that? And my thesis here for delta can help inform, and it's not very complicated. Look at GEX ratio and get a sense of what's happening in the short term, what GEX ratio is, and then we can look at what is delta doing immediately. What is the snapshot in time of how dealers are forward positioning puts and calls and and total delta for the next expiry for what we're seeing. And I think that can be very, very useful.